Welcome to the show. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This is a show, simply put, about helping you take control of your money, making better financial decisions. Today, I want to focus on some things about the stock market and the economy and put it together because very quietly, very clandestine, sneaky. Well, I don't want to use the wrong word. I don't want to say sneaky, but it definitely has snuck up on us. The Nasdaq reached a new all-time high today, and the S&P 500 and the Dow Jones Industrial Average are very close to reaching new highs. It was just about a month ago that the bloom was off the rose. This rally we had since last October was finally coming to an end. The sell in May and go away crowd was out in full force. And then you had people being rolled out all over the place in major media, CNBC in particular, saying, well, this is what happens. You've got higher interest rates. The consumer is extended. You've got the world on fire. You've got inflation. And yet here we are with the market hitting new all-time highs. Now, this isn't supposed to be a show that gets you wound up. It's not a show that's here to pull you in a direction. This is not a political show. What this is about putting common sense into your finance, because ultimately emotions ain't got no brains. Emotions has nothing to do with your money. It's got to be logical, and that's what I want to put into this. Having said that, we'll roll a quick introduction. We're going to talk about why the markets are going up, why we need to separate the economy and the stock market, what the Fed's thinking, and then I want to take a look at something that has really, really snuck up on investors, and no one is talking about it. And I think this is the biggest reason why stocks have been rallying the last couple of weeks. In fact, we had 8 up days in a row, interrupted by yesterday's down day, but we're back to our winning ways. Here's the intro. Stick around, please. Here we go. I sure hope I was looking at the right camera the whole time, but if I wasn't, I apologize. But now I'm looking through camera 1. If you have any questions, hit me up in the comments. I'd love to answer them, and I'd love to find out some of the information and resources that you're looking for to help you make better personal finance decisions for yourself and for your family. If you don't mind, leave me a thumbs up, a heart reaction, an applause, wow, whatever it is. It helps the cause. It helps spread the good word about the work we're doing here and all the education we put out. Sometimes the education is to move you in a direction that's potentially financially better for you. Maybe we'll stop you from making a bad decision. Maybe we'll give you an angle that you haven't thought of yet. And maybe we'll just convince you that you're on the correct course, and right now, no changes are necessary. Let's take a look at the big things today, okay? I'll pop myself up in the corner here. So the Dow up 126, only 0.32%. Not that we're jumping up and down about that, but if you look at the Dow Jones Industrial Average, the chart, by the way, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. We were a couple of weeks ago so close to hitting 40,000 on the Dow and staying above it. 40,000. I remember years ago, we talked about Dow 40,000, and people thought like that's kind of, pie in the sky. That's a pretty lofty number. This is when the Dow was like, 8,000 one day. And you know what? I'm going to tell you one day, the Dow will be at 100,000. Now, I don't know if it'll be in 10 years or 20 years, but typically stocks could double every 10 years. I mean, that's not out of the question, which could put us at 80,000 in that time frame. All right. So but we're very close to hitting all-time highs. I think that's the significant thing. Is if you see this, a couple weeks ago in the middle of April, we were coming down quite a bit, down about 2,000 points from all-time highs. And then you take a look at what's the next one I want to go into. Here we go. Okay. You take a look at the NASDAQ, which did hit a new all-time high today. Let's take a look at that one. Sometimes seeing is believing. NASDAQ Composite did touch a new high today. And look at that, at new highs. See that just a month ago, just about a month ago, it was all over. The bull was over, inflation, but stocks continue to rally. So for people who have the stomach, the wherewithal to stay invested in a way that works for them, are doing real well, and they're seeing their investments either match inflation or above inflation. And when your investments are going up faster than inflation, you, my friend, are indeed creating real wealth. Let's take a look at the next one. Well, we took a look at all of them, S&P 500. If we didn't take a look at that, S&P 500. Look at that. Just about a month ago, it was down and out. And here we are, very, very close to new all-time highs. The high is 52.64. We're about 43 points away from new all-time highs in the S&P 500. What could be leading it? I'm going to say the biggest banks list is going to tell you what you need to know. I just made this watch list, biggest banks. If you take a look here, I'm going to make this a little smaller. Make this a drop smaller so you can get a better view. Okay, I hope you can see that on your smartphone. But if you look at this, I'm going to make it even smaller. All right. Hopefully you can see this all clearly on your smartphone. Take a look. Strain for just a minute here. It'll be worth it, okay? JP Morgan, a couple of weeks ago, had a little earnings turbulence, and the stock tanked in one day. It was a reason why about a month ago that the Dow Jones tanked in a pretty short amount of time. And here we are. Guess what? JP Morgan, not only did they make up that loss, but they just hit a new high. Goldman Sachs, new all-time high. They're matching the price they were in 1999 when they went public. Wells Fargo, 52-week high. Bank of America, I'm not saying it's an all-time high, but 52-week high. The XLF, that's the exchange traded fund, very popular ETF that it tracks financial stocks, almost at a new all-time high, very close. Morgan Stanley, new high. PNC, just about a new high. M&T Bank, right at its high. So you see, folks, the banks are screaming at us saying new highs are ahead of us. Banks lead the way. When banks are doing well, it tells you something. It tells you that there is, in fact, with higher interest rates and inflation, there is money to be had. Banks can lend. Banks have money to lend out. Money is not nearly as tight as people thought, which is one of the reasons why the market was going to go down, because we have higher interest rates for longer. The Federal Reserve has come out and said, Fed Chairman Powell, said, we don't think we're cutting so soon, and just, inflation is pretty sticky. He also said he doesn't think the Fed raises rates. Now, I said yesterday, I wish that the Federal Reserve wouldn't put itself in a box and say, we're done raising rates for now. Don't make a prediction like that, because then investors get excited about it, which he said about a month ago, and investors felt that, well, if he's not going to raise rates anymore, and the economy is holding up pretty good, unemployment is low, corporate earnings have been much stronger than expected, buybacks are pretty big again, dividend raises are pretty big. I mean, these are all, and steady interest rates. Listen, interest rates don't have to be up or down or high or low. A steady interest rate environment is actually a very underrated thing for the stock market, for investors, and for the economy at large. So when you see banks lead the way, money flows through the banks, and if money is flowing through the banks, it's It's flowing through the economy. And evidence the sharp rise, sharp return of the meme stocks recently of Bitcoin reaching new highs. These are all indications that there's plenty of money sloshing around, looking for a home, looking for speculation, and that's why you're seeing the stock market reaching highs. The producer price index figures came out today, and they were a little higher than expected, but the month before was revised downward. I am a little surprised at the uh, Nasdaq hitting new highs just because how investors are so gutsy. I'm not surprised that the Nasdaq is hitting new highs. Markets eventually hit new highs. That's what they do. History has borne that out, by the way. So I don't know if you could really argue with it. But we do have the we do have the consumer price index numbers coming out tomorrow, the CPI, and that is a really, really important number for investors. And if it's up a lot, I do think investors are set up for some disappointment. But if the revisions from previous months are revised lower, that could set us up for more lift in the markets. And then we have our new records across the board in all three of the major averages. We'll see. It's all potential, no guarantees. But we stick around, we stay in for the long term. And I appreciate you giving me a shot listening to me. And if you have any questions, you want to know more about the market, you can come to me. If you want to know more about investing, if you want to learn more about how we would handle your investment accounts, your IRAs, and your financial planning and your insurance needs, you are welcome to reach out to us. You can find us. We're all over the internet, but clientfirststrategy.com, and we'll have something to talk about. Until then, I thank you. I want to wish you a very happy rest of your day. If you're watching this in the replay, thank you very much. These stay on my timeline forever, so you can always go back and check out the episodes that you've missed. All right, I'll end it here. Have a great day. Thank you.